Good evening, guys. Sure you had a wonderful weekend. I welcome you all to tonight's weekly market outlook review and outlook session. Um, we'll be looking at the calendar. Let's look at the calendar for the week first before we go to the charts. Before we go technicals, let's look at the fundamentals. Okay, what do we have for this week? I think this new week is the first week of October, so we'll be expecting NFP, non-farm payroll data will be released this week. And as you all know, NFP is a major news. It's a major news. It plays a major role. It has a high impact on price action on the market. So it's something you should watch out for. Okay, something you should watch out for. You have to be very conservative this week. You have to be very conservative. So let's check the calendar from 22nd to, 29th. Today is 29th to October 4th, which is Friday. Okay. 29th, 4th. We'll first week of every month. Let me fit out the low impact news. I'm only interested in the major impact news. Let me fit out the low impact and medium impact news. Okay. So okay, so this is what we have for the week. On Monday, we have Fed Chair speaks by 6:55 p.m. We also have major news coming from China and also from Euro. We have German prelim CPI. Okay, so we should expect volatility in the market on Monday. There would be high volatility in the market because we have several major news that will be released from the United States. We have one from the United States, one from Europe, and also one from China. Okay. Then on Tuesday, we have two major news coming from the Euro and also from the United States, ISM manufacturing PMI, Jones job openings. Okay. Then on Wednesday, we have OPEC JMC meetings. We have ADP non-farm employment change. And also on Thursday, CPI, Swiss franc, and also unemployment claims for the dollar, and also ISM services for the dollar. Then on Friday, we have NFP, non-farm employment change, and unemployment rates. We also have averagely our earnings, will be released on Friday. So this week will be a highly volatile week. The market will be very volatile this week. You should know what you're doing in the market. You have to be very conservative this week, okay? It's going to be a great week, okay? As you know, when there is high volatility in the market, it offers traders opportunity to make good money, but it also comes with risk. So you need to manage risk like a pro this week. Okay, I always advise that you trade less on weeks when you have several major news to be released. You trade less, risk less. Okay, if you're not that experienced, you should risk less. Don't take unnecessary risk. Okay, don't take unnecessary risk. You should risk less on weeks that there are major news, several major news. I hope that is clear. So let's go to the charts. So the first pair we'll be looking at is GBPUSD. GBPUSD, and the first chart I work with is the weekly chart. To know the trend of the week, I start analyzing from the weekly time frame. Okay. So how last week candle close will determine the trend for this week. The candlestick pattern for last week market will determine the trend for this week. So let's start with the weekly time frame. I think last week candle was bullish. Yeah, last week was bullish, but this pattern is called a spinning top. This is a spinning top, and the spinning top indicates change in trend from bullish to bearish. But this is a bullish spinning top, and when a bullish spinning top forms, we are to wait for the next candle to close bearish before we sell GBPUSD, or before we conclude that the trend has changed from bullish to bearish. We can't just jump in and start selling. Okay, before we sell, we want to be sure there are sellers in the market. Okay, we want to be sure there are a lot of peers, a lot of sellers in the market. Okay, when you have a lot of sellers in the market, there's a high probability, excuse me, there's a high probability that the price will drop. When there are a lot of traders who are willing to sell that instrument, there's a high probability that price will drop, because at that point, supply would exceed demand. Supply would exceed demand. So we would expect price to drop when supply exceeds demand. So if you focus on the weekly time frame, if you're a position trader, it means you have to wait for this week candle to close. If this week candle closes bearish, then we should expect more bearish move next week. But as day traders or as swing traders, you want to make some money. You want to make some good pips on a daily basis or on a weekly basis. So what you need to do is switch to lower time frames. Okay, you need to know how to use multiple time frames, different time frames, to know the direction of the market. It's very important. You don't just focus on one time frame. You don't just focus on one time frame. Like I said, it also depends on the type of trader that you are. Okay, if you're a position trader, you just want to focus on a higher time frame, which is okay. But as a day trader, you need to know how to use multiple time frames, using the weekly to know the trend of the market for the week, using the daily to know the trend for the day. Okay, then you could use 4 hour, 1 hour, 15 minutes for your entries. I hope that is clear. So all we need to do now is go down to lower time frame. Let's go down to daily. Let's see how last Friday candle closed. So you can see on daily, this is Monday last week. This is Monday, Tuesday, Wednesday, Thursday, Friday. So it was like price was in a range all through last week. Like price was in a range. On Monday, it bought. Tuesday also it bought. On Wednesday, it sold. Thursday, it bought. And on Friday, it sold. So a resistance was created. This was the resistance for last week market. And we had a support for last week. This was a support for last week market. Okay, so it's either price breaks this high, this resistance, or breaks this support. Okay, now based on how last week candle closed, which is a spinning top, there's a high probability that price is going to be bearish this week. There's a high probability that GBPUSD is going to be bearish this week. So what am I looking at for this week? Now, this previous high is an area of liquidity. A lot of retail traders would have executed sell after this pattern. Okay, a lot of retail traders would have executed sell, and there are a lot of stop losses residing at these previous highs. These previous highs, there are a lot of stop losses residing at this previous high, and there is a high probability they would go for the stop losses. Okay, there's a high probability they will go for the stop losses. So it's either price breaks this support for us to sell, or we wait for price to clear liquidity, clear all the stop losses residing at this previous high before we sell. Those are the two things that is likely going to play out on GBPUSD this coming week. That is my expectation on GBPUSD. It's either price breaks this previous high. Okay, now after liquidity has been cleared, we need to wait for a bearish reversal pattern to form. We need to wait for a bearish reversal pattern to form before we go bearish. Okay, so or price breaks this support. If price breaks this support, you can go bearish. If price clears liquidity, wait for a bearish reversal pattern to form on GU before you go bearish. It could be on a daily time frame, It could be on could be daily, it could be on 4-hour time frame, and it could also be on 1-hour time frame. Okay. Okay. So let's move to the next pair. Let's look at gold. Gold, my take on gold. Gold has been bullish for the past weeks, for months now. Gold has been bullish. It's been bullish. For those who caught the move at its early phase, congratulations. I'm sure I've made some good profits on gold. Okay. Gold has been bullish for months now. It's been bullish, you can see. It's been bullish all through the year. So far, gold has been bullish from January to date. Even last year, gold was also bullish. It's been bullish. So as you can see, last week candle closed strongly bullish. Okay. As you can see, this was last week candle. This is a bullish candle. And this candle looks like a shooting star, not a valid shooting star. Okay. It looks like a shooting star, but not a valid shooting star. So when you have this kind of pattern, you're expected to wait for the next candle to close bearish before you sell. Okay, you have to wait for the next candle to close bearish. So we have what looks like a shooting star. So we need to wait for the next candle to close. We can't execute a sell trade when the candles that are printed on the charts are bullish candles. We can't sell. This is an indication that the buyers, we still have much buyers in the market, and you can't have much buyers in the market and be selling. You can't be selling when there are a lot of buyers in the market. Okay, you can't be selling. So you need to be sure that you have sellers in the market. Now, for me, this won't be the right time to buy gold. Like I said, gold has been bullish for some time. If you're entering a buy trade from the current market price, the risk will be very high. The risk will be very high. And to be a consistently profitable trader, you need to ensure that your risk is less. Your risk should always be less than the reward. That is the sure way to be a consistently profitable trader. Your risk reward must be above 1:1.5. Anything less than that, you will be struggling in the market. You will make profit today, tomorrow you give it back to the market. You make profit today for 1 week, the following week you give it back to the market. If your risk reward is less than 1:1.5. So if you didn't buy gold from this point after this breakout, okay, buying from this point is very risky. If you're considering buying, you should wait for price to pull back a little before you join the buy trend. You can't buy from this point. As far as I'm concerned, is at overbought level. Let's just apply it. There's an indicator you can use to know when price is overbought. But just by looking at the chart, I can tell that gold is at overbought level. So let's apply, we have RSI, we have, what's it called? RSI, we have stochastic. So let's just work with stochastic indicator. Oh, let's see, let's just see. Okay, with stochastic indicator, okay, let's see. If it's above level 80, I think stochastic, we have level 80 and level 20. So you can see where the stochastic line is. You can see we have level 80, we have level 20. And when the markets or when the line is above level 80, it's an indication that that instrument is at overbought area. Okay, is at overbought area. And if it is below level 20, it indicates that the instrument is oversold. That asset is at oversold area. And when it's at overbought, that is the right time to consider selling. Okay, when it's overbought, you look for sell opportunities. And when the line is at oversold area, you look up. If it's below level 20, you look for opportunity to buy. Okay, you look for opportunity to buy. Okay, that is at overbought indicates that supply is beginning to increase and demand is beginning to drop. Are you getting me? When a price of an item is high, is at its peak, a lot of people would avoid buying it, right? A lot of people will avoid buying it. So at that point in time, sellers, when price is high, that is when they want to sell. When price is high, they want to make profits. Okay, so when price is out of overbought, you look for opportunities to sell. When it's oversold, it means it is cheap. The price has dropped so much and it's very cheap. And when it is very cheap, a lot of people want to buy at that point. Demand will increase. Okay, demand would increase and a lot of people would want to buy at that point. Okay, so as you can see here, stochastic is above 80. But when you look at the charts, there is no confirmation that there are sellers in the market. You can see. You can see. So there's divergence. This is divergence. This is what we call divergence. Okay, this is divergence. The indicator says overbought, but on the chart, though we have a candlestick pattern indicating change in trend, we still need to wait for confirmation. We still need to wait for the next candle to close bearish. We want to be sure that there are sellers in the market. So if this coming week candle closes bearish, there's a high probability that next week gold will be what? Bearish. Okay, so let's move down to the daily time frame. Let's move down to the daily time frame. Now, the daily time frame, if we're able to identify a bearish reversal pattern on the daily time frame, we could go bearish on gold. If we are able to identify a valid bearish reversal pattern, okay, we could go bearish on gold. So let's go down to daily time frame. What do we have on the daily? So you can see what we had on a daily time frame. We don't have a valid, this is not a valid bearish reversal pattern. Okay, it's not a valid bearish reversal pattern. Okay, though Friday candle closed bearish, it closed bearish. So after we've confirmed this pattern now, for us to take the risk trading with this pattern, we need to ensure that there's a shift in market structure. Okay, because this is not a valid bearish reversal pattern. So we need to ensure that there is a shift in market structure on 4 hour, 1 hour, or 15 minutes time. Are you with me? We need to be sure there is a shift in market structure on the lower time frame. So let's switch to daily. Sorry, 4 hour. What do we have on 4 hour? Okay, so on 4 hour, you would notice here we have we had a support here. Okay, so price tested the support level. I think, yeah, the candle closed a little bit, few pips below this support. Okay, the support was created here. Support was created here. This support was broken. This support has become a resistance. It has become a resistance. Now, when price breaks a resistance level or a support level, it's expected to pull back. So, for example, this was a support, and when a support is broken, that support becomes a resistance. Okay, so this support has become a resistance, and when there is a breakout from a support, price is expected to pull back to retest that support, which has become a resistance. Okay, so I wouldn't advise you sell gold from the current market price. If you want to sell gold, wait for price to pull back to test this support stone resistance. This will be a good area, a good price to sell gold. Are you with me? This will be a good price to sell gold. Okay, so my bias for gold this week is bearish. That's my bias for gold, bearish. I'm considering selling gold this week. But like I said, I want to see price pull back to this support store resistance before going bearish on gold. But let's go down to 1 hour. Let's see what we have on 1 hour. Okay, so on 1 hour also, you would see a fair value gap was created here on 1 hour. Can you see? The fair value gap is the gap in between the low of this candle and the high of this candle. That is the fair value gap. Okay, the low and the high of this candle, the gap in between is called a fair value gap. So I want to see price fill that gap. Okay, this is also referred to as imbalance in the market. Imbalance, this is an imbalance. So price is expected to fill this gap before going bearish. I hope you get that. So that is my expectation on gold this week. Okay, I want to see price pull back, fill this fair value gap, then look for a bearish reversal pattern to form at this area, then go bearish on gold. I hope that is clear. Let's move to the next pair, Euro Australian dollar. Euro Australian dollar. So how did last week candle go? Let's start with the weekly. Euro Aussie. Okay, last week was strongly bearish, right? It was strongly bearish. Euro Aussie was bearish all through the week. It was bearish. Over 267 pips. Over 267 pips last week. For those who caught the move, congratulations. Okay. So what are my expectations on Euro Aussie this week? What am I looking out for? So after the close of last week candle, okay, now if we look at the weekly time frame, first thing we'll notice here is that the fair value gap, we have a fair value gap here. And last week, this gap got filled. Right? This gap got filled. So there's a high probability that price is going to pull back from this area. There's a high probability that price is going to pull back from this area. Now, if this low, the low of this candle is broken, or the low of this fair value gap is broken, that is, if a candle closes below that low of the fair value gap, and also the low of this of last week candle, then we should expect more bearish move on Euro Australian dollar. I hope you get that. We should expect more bearish move on Euro Australian dollar if this low, the low of this fair value gap, is cleared. Okay, so now after the close of last week candle, how did Friday candle close? That's the last candle on a daily time frame last week. How did it close? Okay, so let's see. Also, yeah, this is not a valid, though it looks like a spinning bottom, but not valid. Now, this is a bearish spinning bottom. Okay, this is a bearish spinning bottom. Also, if you apply your Fibonacci from this swing low, okay, let's take it from this swing low to this swing high. Okay, price is at a discount area. Can you see that? Price is at a discount area. Okay, it's at a discount area, and at discount, you should look for buy opportunities, right? Look for buy setup when price is at a discount zone or discount area, and you look for sell opportunity when price is at a premium zone, a premium level. So as you can see, price filled a fair value gap, and that fair value gap is at a discount area. So there's a high probability that price is likely, there's a high probability that price will pull back from that area. Okay, but since last Friday candle closed bearish, okay, we can't jump in and start buying. We need to wait for Monday candle to close. Okay, and the next candle must close bullish. That is the candle after this bearish spinning top must close bullish for us to consider buying Euro Australian dollar. I hope that is clear. So I would advise you patiently wait for the Monday candle to close before you go bullish on Euro Australian dollar. Wait for the Monday candle to close before you go bullish on Euro Australian dollar. Also remember, there are several major news that will be released from Eurozone this week. Okay, that would also play a major role in the markets. Okay, so we are expecting Euro to be bullish. If the major news comes out negative for Euro, Euro is likely going to be weak. Okay, Euro is likely going to be weak if the news is negative for Euro. But if it comes out positive for the Euro and technically Euro is expected to be bullish, then the momentum, we should expect high volatility. We should expect Euro to be bullish. if the fundamental comes out positive for the euro, then we should expect euro to be strongly bullish because the technicals indicate that euro would be bullish this week. So if the fundamental supports the technical, then we should expect more bullish move, strong bullish move on euro pace. I hope that is clear. So let's go down to daily. Sorry, let's go down to 4 hour. On 4 hour, what do we have on 4 hour? Okay, so you can see what we have on 4 hour. This is 4 hour time frame. Last 4 hour candle closed bullish. It's closed bullish. Okay, we have what looks like a bullish reversal pattern in 4 hour time frame. Okay, but before we buy, let's see. 4 hour is giving us a buy signal. 4 hour is giving us a buy signal. So that's all. Since we have a buy signal or a buy setup on a 4 hour time frame, we need to go down to lower time frame, 1 hour, and ensure there is a shift in market structure on 1 hour or 15 minutes time frame. So let's work with 15 minutes time frame. So on 15 minutes time frame, this is lower high, right? Gave us a low, a lower high, and a lower low, right? Lower high, lower low. So the shift in market structure would occur at this price. Okay, so if you're considering buying Euro Aussie, you should wait for price to close above this high, this lower high. This is the most recent lower high. Okay, so this is where you should be considering going bullish on Euro Australian dollar. Okay, you need to wait for price or a candle to close above this highs here. Okay, before you consider going bullish on Euro Australian dollar. Now, you might have to wait for price to pull back after price breaks out from this high, okay? Because if you calculate the risk from this point, let's assume a candle closes at this point and you decide to buy from that point, you can see the risk because this is where you have to set your stop loss. And you can see the risk is about 110 pips. 110 pips. That risk is too high. So you might have to wait for price to pull back. Okay, you might have to wait for price to pull back. You could apply a Fibonacci, take it from this swing high to this swing low. Okay, take it from swing high to the swing low. So let's assume the candle that will close above this high close, let's say at this point. Okay, so let's assume it closes at this point. So you want to wait for price to pull back. You can say discount should be below 50. So price should pull back to 36.0 or 25.0. This is the area you should consider buying. I hope you're with me. I hope you're getting me. Okay. So that's my take on Euro Aussie. My bias for Euro Aussie this week is bullish. I want to see price shift. I want to see shift in market structure, then a pull back to a discount area before going bullish on Euro Aussie this week. I hope that is clear. So the next pair we'll be looking at is Australian dollar USD. Australian dollar USD. So let's start with the weekly time frame. You always start with the weekly time frame. Don't care if you're a scalper, daily time or trader, day trader, you should always start with the weekly time frame. Okay, you must know the trend for the week. And any trade you're going to execute using lower time frame must align with the trend for the week, the dominant trend for the week. Very important. Always start with the weekly time frame. Okay. And also the month will be ending on Monday. So after the close of the monthly candle, you should also see how the candlestick pattern that formed for that month to know the direction for the month. It's very important. You should do that once every month. At the end of the month, you look at the candlestick pattern on the monthly time frame to know the trend for the month. Okay, so last week, strongly bullish, price cleared all the liquidity that was residing at this previous high. You can see price cleared all the liquidity that was residing at this previous high. And after that, what happened on the daily time frame? Let's see how the candle closed on the daily. Okay, let's go down to daily. On the daily, what do we have? Okay, so you can see the pattern we have here is similar to what we saw on GU, similar to what we had on GU. Like last week market on Australian dollar USD was like in the range. This was Monday, Tuesday, Wednesday, Thursday. Monday, Tuesday was bullish, Wednesday bearish, Thursday bullish, and Friday indecision. You can see indecision. Neither buyers nor sellers won the battle at the upper hand on Friday. So this is a spinning top, a bullish spinning top. That is not a confirmation to sell. Okay, a bullish spinning top is not a confirmation to sell. We need to wait for Monday candle to close bearish before we go bearish on gold. Sorry, on Australian dollar USD. We need to wait for the candle to close on Monday before we go bearish. That's my take. And if you don't want to wait for Monday candle to close, for day traders or scalpers, you don't want to wait for the Monday candle to close before you sell. As you can see here on 4 hour, we had a shooting star, a bullish shooting star. The next candle closed bearish. This is a sell signal. Okay, this is a sell signal. Okay, before we jump in and start selling, we need to ensure that there's a shift in market structure on lower time frame. Okay, we need to ensure, because if you look at what we have here on 4 hour, price has been forming series of higher high and higher low, higher high and higher low. So this is a bullish structure. The structure is what's bullish. If we also apply our trend line, this is a bullish trend line. You can see this is a bullish trend line, as you can see. So looking at this, Australian dollar USD is what's bullish. It is still bullish. This is a bullish structure. So before we consider selling, we need to ensure that there is a shift in market structure on a lower time frame. Now, here on 4 hour time frame, a shift in market structure would have occurred at this point, but you can see price didn't break this low. If this candle had closed below this low, we would have said, okay, there's a shift in market structure. We would have said shift in market structure has occurred. And from that point, we would expect price to start going bearish, right? We expect price to start going bearish after pulling back to fill fair value gap that was created here. We would expect price to go bearish, but there was no shift in market structure on the 4 hour time frame. So we need to go down to lower time frame. Let's say 1 hour. This is 1 hour. Then let's go to 15 minutes. Okay, so on 15 minutes, we'd expect the shift in market structure to occur at this point. We want to see price close below this low. This is where the shift in market structure will occur on 15 minutes time frame. So it's at this point we would consider going bearish. Okay, this is where you should consider going bearish. Now you need to calculate the risk. If you're selling, let's assume a candle close at this point and you decide to sell, calculate the risk involved here. This is too high, 72 pips. So you might have to wait for price to pull back. So you could apply your Fibonacci, take it from this swing low. Okay, take it from this swing low to this swing high. Okay. Okay. So take it from swing low to swing high. Okay. Okay. So let's assume the candle that will close below this higher low. Let's assume it closes at this price. So if we decide to sell from this price, our risk could be very high. I don't take such risk. Okay, the risk will be very high. It's about 74 pips. So after breakout from this low, I want to see price pull back to a premium area, which will be above level 50. 50 is equilibrium. I want to see price pull back to a premium area. And as you can see, at a premium area, we have a fair value gap here. You can see the gap in between the low of this candle and the high of this candle. So I want to see price pull back to this area. This is where I would be considering selling. This zone, this is where I'll be considering selling. After the shift in market structure, price should pull back to premium area before going bearish. That's my take. That's my expectation on gold this new week. I hope that is clear. If you have any question, just drop it in the comment section. And if this is your first time you're participating or watching on the weekly and Outlook session, okay, this is your first time, please just subscribe to the channel. Just subscribe to the channel. If you have any question, just drop it in the comment section. It will be attended to. Okay, just drop it in the comment section. Give the video a thumbs up. If you're getting value from the stream, give it a thumbs up. Okay, so that's my take on Australian dollar USD. So let's move to the next pair. After USD card, we'll look at GBPJPY, and that will be all for tonight's session. So let's go. Let's see what we have on USD card. USD card. All right, on USD card, what do we have here? Let's start with the weekly time frame. USD card, as you can see, last week candle, you can see this is an hammer. This is an hammer. Price tested this support. Also cleared liquidity, setting at this previous low. Okay, so this is a demand zone. Okay, this is a demand zone. Price tested the demand zone, and you can see the pattern that formed after price tested this zone. We have an hammer, but this is a bearish hammer. This is a bearish hammer. So we can't just, jump in and start buying. After a bearish hammer forms, we are expected to wait for the next candle to close bullish before we buy. Okay, before we buy, we need to ensure that the next candle closes bullish. Okay, so we should wait for Monday. Yeah, okay, so this we're on the weekly. So if you're a swing trader or a position trader, you have to wait for this week candle to close before you buy. Okay, you have to wait for the week candle to close before you buy. But most times when you wait for the higher time frame candle to form before you execute the trade, most times your risk will be high and also the reward will be high. Yeah. But if you're able to analyze the charts, determine the trend of the market using multiple time frames, going down to lower time frame to execute your trade, it will help reduce the risk and increase the profit. Your reward would increase and your risk would reduce. Okay, so it's very important that you know how to analyze, using different time frames. Unless you're comfortable taking higher risk, using the higher time frame for your analysis and your execution, it's okay. You just have to trade with what works for you. Okay, what makes you profit consistently in the market is what you should stick with. That's what you should trade with. Okay, so after the formation of last week candle, let's go down to daily. What do we have on a daily? So on a daily, if we're able to identify a bearish reversal pattern, bullish reversal pattern on a daily, then we could consider going bullish. So on USD card, what I see here is a bullish reversal pattern. This is what I see on a daily time frame. Yeah, what we have here this is not a bullish reversal pattern. This candle is not a bullish reversal pattern, but the fact that after this pattern formed, after this bullish candlestick closed, the next candle closed bearish, and it's created a resistance level, and the market is currently trading above that resistance level. That tells me that demand is increasing. Okay, that tells me demand is increasing. Okay, so with what we have on a daily time frame, I think USD card is set for buy. Okay, USD card is set for buy. We can only consider selling if this support is broken. Okay, this support is what is holding price right now. So I think what they did last week was to clear liquidity that was residing at this previous low. I think that was what they did last week. They cleared liquidity residing at this previous low, and that they have achieved. So there's a high probability for USD CAD to go bullish this week. But remember, this week is NFP week. Okay, it is NFP week, and when NFP is being expected, NFP data is being expected to be released, most times price would always go into a range, most times before NFP. Before NFP, most times price will just go into a range. It will just go into a range, and that's why I advise that if you're trading this week, you have to be very conservative. Don't be aggressive this week. Okay, you have to be very conservative. Okay, so that's my take on USD CAD. I'm expecting USD CAD to buy this week, to be bullish this week. That's my expectation. Okay, but you might want to wait for price to pull back. Okay, remember, after a breakout from a resistance level, this resistance has become a support. So we want to see price pull back to test this support before going bullish. Okay, so if you are considering buying USD CAD, I would suggest you wait for price to pull back to this support. This is a resistance turn support before you go bullish. Okay, and if you are buying, your stop loss should be below this level. Your stop loss should be below this low. Okay, and your first TP could be this high. This is an area of liquidity. Okay, your first TP should be this, the high of this candle. I hope that is clear. Okay, so let's look at GBPJPY, and that will be the last pair for today's session. GBPJPY. 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 So let's start with the weekly time frame. All right, so last week closed as a shooting star. Okay, GJ closed as a shooting star. Last week candle. This is a shooting star candle. And a shooting star candle indicates change in trend from bullish to bearish. So you can see week before last week was bullish, and last week candle closed as a shooting star. It's an indication that the sellers are showing up in the market. So when you see a shooting star, you should expect price to go bearish. Okay, you should expect price to go bearish. Now let's go down to daily. Okay, daily also, you can see what we have here. I think it's an engulfing pattern. Yeah, this is an engulfing pattern on the daily. So this is a bearish setup on GJ. This is a bearish setup on GJ. Okay, but I would suggest, unless you have a sell trade on GJ already, unless you've opened a sell trade on GJ, this wouldn't be the right time to sell GJ. This wouldn't be the right time and price to sell GJ. Okay, you can see where price started dropping on GJ. You can see this is where the price started dropping on GJ, and it did over 450 pips. You can see 450 pips. So this wouldn't be the right time to sell GJ. This wouldn't be the right time to sell GJ. So I would advise you wait for price to pull back and see if fair value gap was created here. So I would suggest you wait for price to pull back to this zone. This fair value gap should be filled. Okay, this fair value gap should be filled before you consider selling GBPJPY. Wait for price to pull back into this zone before you sell GBPJPY. Okay, you could also apply a Fibonacci, take it from this swing low to this swing high. Okay, on a 4-hour time frame, the shift in market structure should have occurred here. On the 4-hour time frame, the shift in market structure should have occurred here. But you can see price just tested this level. It didn't break out from this low. You can see it didn't break out from this low. So we can't just jump in and start selling. Wait for price to pull back. Okay, wait for price to pull back to a premium area before you go bearish on GBPJPY. Okay, unless you're comfortable taking that much risk, that's high risk. Okay, because if you sell from this point, your stop loss will be at this point. It's about 600 and something pips. So if you're risking 600 and something pips on a trade, what would be your reward? What would be your reward? Let's say you're trading with 1:1.5. So if you're risking 600 pips, then your TP should not go below 900 pips. 900 pips. 900 pips. The question is, do you have the patience? Do you have the patience? Would you wait for price to deliver 900 and something pips before you close the trade? And that could take weeks, if not months. So what type of trader are you? Are you a swing trader or a position trader? It's only a position trader that will take this kind of risk. Okay, as a day trader, you can't take this kind of risk. As a scalper, you can't take this kind of risk. Only a position trader should take this kind of high risk, this type of risk. Okay, so as a day trader, you should wait for price to pull back. Okay, wait for price to pull back to premium before you go bearish on GJ. I hope that is clear. And that'll be all for this session. Appreciate you for your participation. Appreciate you for watching. Please remember to subscribe to the channel, got value, and also give the video a thumbs up. Thanks for watching. I wish you a profitable trading week. Please drop your questions in the comment section. Like I said, it will be attended to. Bye for now. See you in the next video.